Thank you, Krishma. Good afternoon and Vanakkam, Chennai. I think Krishma gave a very quick executive summary of the company, but I just what we will do is we'll take you through about 15-20 minutes of who we are and our past and our legacy over the last 17 years, and then throw open the floor for any questions. Yeah. Standard disclaimer, equity issue. So all the risk factors are mentioned here. So yeah, this is again, Krishna mentioned this, just to recap, I think 12,500 crores, about 2,500 crores is primary within that and 10,000 crores is offer for sale. We have a reserve portion for employees and a reserve portion for HDFC Bank shareholder. The issue is from 25th to 27th of June, yeah, a couple of days. Okay. Yeah, so that's in a nutshell who we are. HDB is, I think, a couple of call outs here. One is a completely diversified retail only focused NBFC, right? Banks and NBFCs do business across various segments. There are retail customers, there are wholesale customers, but right from inception, we have been focused on pure retail, which is like a single loan customer or a customer with a limited amount of exposure. That's how we have built this scale. The company was incorporated in 2007, commenced operations in 2008-9, so it's about 17 years of operation. Promoted, as you can see here, HDFC Bank is the largest shareholder today, promoter shareholder in excess of 94%, and then you have some other small shareholding by others. In terms of customer franchise, I think we have multiple businesses within this. We have quite a diversified kind of business within this. There are three main business verticals. One is called enterprise lending, second is called asset finance, third is called consumer finance. We'll just move into that as we move forward. What is most important also is the fact that this is so any lending business is all about credit cycles, right? So there are good periods, there are not so good periods, there are economic upturns, there are economic downturns. What we have is a very, very well seasoned book. Most of our book, including and the loans can be short term, loans can be long term, irrespective of what is the tenor of the loan. We have seen a well seasoned book, which means we have lent to customers. Some of them have completed the loan. We have had a second cycle, we have had a third cycle. So we had almost close to about 3-4 cycles, which you have seen right through that. So that is what we meant by well seasoned and granular loan book. Granular again refers to the fact that we are extremely retail. In terms of the business mix today, out of the three verticals, enterprise lending, asset finance and consumer finance, roughly the breakup is as follows. About 39% is enterprise lending, 38% is asset finance, and about 23% is consumer lending. These are just some quick stats, right? About 1 trillion or about 106,883 crores of book to be precise. 19.2 million customers, that's like 1.92 crores. PAT, profit after tax, just short of about 2,200, about 2,180. And some metrics around return on asset, return on equity, NPA numbers, as well as debt to equity, right? So just a bit of a deep dive into each of these businesses. The three lines indicate the three different kind of businesses which we have. Just move here, otherwise I end up flashing the laser at you. Just want to move here. Thanks. Enterprise lending, that is, these businesses was when we formed the company, we started with a certain set of businesses. Most of the businesses within enterprise lending was you want it to be removed?
Yeah, it will be easy for us.
Yeah. I think it's a small room. Am I audible without the mic? So enterprise lending primarily focus on what is called as medium and small enterprises, MSME segment. We have a variety of products within that. All so what you see in these boxes are the size, right? About 43 lakhs, for example, is the average ticket size for loan against property. The contract tenure is about 9 years, and so on and so forth. So there is a wide variation ranging from about a small gold loan, which is about 1,50,000 for a period of 2 years, to a loan against property, which is for 9 years and 43 lakhs. These are typically, most of these products are done through what is called neighborhood lending. So we have a branch network which is across India, and then typically you will have a neighborhood which is close to the branch. You will have a set of MSME customers there. Our team basically maintains long-term relationship with them, addresses their needs in terms of working capital as their business expands, and that's how this business is really organized. A couple of years later, we introduced what is known as asset finance. These are all loans with collateral, that is secured loans. So there is a security to back up the loan in case of a customer default. We are able to recover the loan using executing those collateral. These are around what is commonly known in the industry also as wheels business, right? So there is commercial vehicle, which is from small commercial vehicle to heavy commercial vehicle, trucks, construction equipment, which is typically used for either infrastructure, mining, those kind of uses, and tractor loan, which is primarily focused on the agri and farm sector. Again, varying ticket sizes, anywhere from 3,20,000 to about 8,60,000 to 20 lakh for construction equipment loan. As we grew over the years, in about 7-8 years since inception, about 2016, we had close to about 500 branches by then. And I think we felt that it was the right time to go into what we call as mass retail lending, which is where most of the consumer finance products are targeted. These are small ticket loans, consumption loans, everyday use. Most of the people in this room also would have used these at various points of time. Starting with consumer durable loans, two-wheeler and auto loans, everybody is familiar with that. And then we also started something which is exclusively for our customers, right? Whoever customers we have, based on their track record and performance, we give out any other kind of loans to them. That is called relationship personal loan. It is by invite only. And then we started micro lending about a few years back. It's a small one at this point of time. So that's the journey, and that's how we have grown over the last 17 years. And then as we also have protection plans, insurance plans, which are targeted towards loan protection, etc. A variety of general insurance, life insurance, and health insurance, all focused on customers' requirement. We don't do products which are not relevant to the customer, not relevant to the particular segment of the customer. Purely focused on loan cover, protection, make sure that the customer as well as we are protected. Okay, is there any other way you can move this forward? Thank you. So these are just some strengths which we have acquired over. These are really what makes us believe that we are in this business and hope to succeed and excel over various cycles. I'll talk to each one of them as we move forward. So one is really scale. We talked about this. What do you mean by scale? Scale is something which is like on a pan-national scale, multiple products, diversified set of businesses, pan-India. So yeah, so just to recap, about 1,06,883, 19.2 million customers. We have close to 1770 branches. Branches are physical branches which are spread across 1170 towns in India. primarily looking after customer origination, underwriting, collections, and customer servicing. What do you mean by granular book is the fact that the top 20 largest customers of ours account for just 0.34% of our loan book, right? If you have any kind of corporate loans, which are obviously easy to extend in the market, many corporates have large requirements, but then it becomes like a risk in terms of single party risk, exposure risk, etc. So right from inception, we have made sure that by very conscious choice, not something which we have done in the last couple of years, but from inception, made sure that the book is extremely granular in nature. And some other profitability return metrics which are in line with what our expectations from investors as well as our parents are. Once we started consumer lending business in 2016, I think there is a rapid growth in terms of the customer franchise. Customer franchise is the number of customers we have. So what we have done is from March 22, which was about 90 lakhs customers. Today we have about, as on March 25, we have about 1.92 crore customers, which is almost roughly double of customer base in about a matter of about 3 years. Very, very granular book. Again, 1,65,000 is the average ticket size, which means you can imagine the number of loans which we have to give out. Make sure that 1,06,000 crores loan, which is made up of an average ticket size of 165.34. We just talked about it earlier. So one question which common comes up, right? Today also it might come up as to why another company from HDFC Bank. When you have HDFC Bank in existence since 1995, what was the need to come up with another entity, right? Primarily, from inception, the design was to make sure that India is very, very big, very vast in terms of population, in terms of geography, in terms of its spread across metro, non-urban markets, rural markets. I think there are many, many underserved, undertapped markets which existed 17 years back, which exist today, and that's really the HDB story. So all our products are tailor-made to take care of underserved markets, underbanked, not served. So when we go to a vehicle loan customer, a vehicle loan manufacturer, what is the value proposition? Value proposition is that we will serve you in markets where the penetration is low. It improves obviously affordability in those markets. It improves the OEM sale in those markets. Obviously there is credit extended. It's like a win-win for everybody, our manufacturer partners, for the consumer as well as us. And that's really what these businesses have grown. Each of these businesses have, of course, a different track record in terms of where they are today, what they are expected to do over the next couple of years. But largely, I mean, there is a very, very large headroom in terms of overall economic growth, affordability, consumption pattern, credit growth, which we can see across all the segments where we are there. Just to recap, 1771 branches, over 1170. This, I'll draw your attention to this slide, this pie chart here. So tier 1, tier 2, tier 3 are the top 100 cities in India, top 100 in terms of population, and tier 4 and beyond are 101 in terms of population and beyond. Almost 70% of our branches, these 1770 branches, are in tier 4 and beyond. So we are truly Bharat, not just focused on just the metro locations and urban locations, but across India, addressing customers. What we address is what we call something called aspirational India, right? There is an upper layer of customers, the affluent and the extra affluent and the high net worth individual. Then you have the middle layer, which is aspiring, which is constantly looking to upgrade their lifestyle, upgrade their livelihood, upgrade their income stream, etc. That's really the segment which we target. And this segment doesn't reside in a single geographic location, doesn't reside only in metros, it is spread all over India. And that's really the addressable base for which we have built this infrastructure over the last 17 years. We also are truly diversified in terms of geographical presence. So what you can see here is north, south, east, west. So we are not a geographically concentrated company. We are not a Tamil Nadu company. We are not a Gujarat company. We are not a Maharashtra company. But we are a pan-India company. So this largely reflects what the GDP distribution of India today is. Kind of it will reflect where we are. And obviously from Jammu and Kashmir to Tamil Nadu and from Gujarat to Arunachal Pradesh, we have presence all over. Kind of number of branches kind of determine the potential which is there in those towns. Tamil Nadu we are here in Tamil Nadu. It happens to be our most penetrated market in the country. Yeah, close to about 212 branches in Tamil Nadu alone. UP should be somewhere close by. So how do we do what we do? So as you can obviously you've all been experiencing, everything is today is digital, right? I think there's always a mix of digital as well as physical presence which is required. So 97% of our acquisition happens actually on where the customer can do the journey, or our employees can help customer do the journey using a digital mode. That's close to about 97%. Anything to do with once you become a customer, post any kind of customer support, collections, all those are like completely either through an app. Most of the customer support is either using a web portal, WhatsApp channel, or through an app. And similarly, collection, we are a lending company, so there will be customers who do not pay on time. The entire collection is also completely digitally assisted, with almost 95% of the collections managed through banking channels. So what you see is the output, but obviously there is a big infrastructure in terms of making this technology work. Make sure that if there is a, like around the Dasara Diwali day, obviously we have a peak in some of these volumes of consumer durable, etc. So the entire engine has to make sure that if we have 10 times the number of customers who inquire from us or who want a loan from us, our infrastructure kind of keeps up with that. A lending company typically has 2-3 main I would say basis on which the foundation on which the business is structured. One is obviously you have to address a certain set of customers, but beyond that, obviously your underwriting techniques, how you assess the customer, determine the eligibility, what is the exact amount of loan which the customer will be able to repay. Right, many of them are personal loans. Right, there is like if it is a secured loan, there is a value of the security, and the loan is determined by security. But if it's a personal loan, obviously you have to assess what is the eligibility of the customer, what will be the right amount of EMI which the customer can bear, and so on and so forth. We have very varied type of businesses, as I said, from starting with consumer lending going up to enterprise lending. Each one of them has a different methodology. If you take a small ticket consumption loan, if you go and apply a consumer durable loan in, say, a Vasant & Company, the decision will come to you in a matter of like a minute. Right, within a minute you will get to know whether you are eligible and what is the amount of loan you will get. But if it is a loan against property, obviously there is like physical verification to be done, some land records to be checked, there is some technical aspects which have to be checked. So those are short, long-term ones. So underwriting is again a mix between local knowledge, where you need to understand the local geography, the industries which are doing well locally, and a sound knowledge of that. And India is very heterogeneous. What works for textile in Tirupur may not work for textiles in a different state. So those are the kind of nuances which our entire team, not just sales, the entire branch team, the credit team, etc., have developed expertise over a period of this thing, and we believe it is one of our strongest strengths. So the strongest strength, basically, right, in terms of combining our physical infrastructure with the latest in digital capabilities to enhance customer experience as well as create value. Yeah. Important aspect of our business, collections. Again, everything is done almost digitally. I mentioned about 85% is collected digitally. So we have scorecards running which are able to profile the customer based on the customer's past repayment track record, whether the person requires any amount of nudging, is the customer conscientious enough to pay on his or her own, if they miss a payment, or do we need any other channel of communication, a phone call, WhatsApp, SMS, or does it require a physical visit to the customer's residence or workplace to basically make sure that to assess their capability, get a promise for this thing. All those are run digitally. Scorecards are run at a central level, and then the output of these are deployed in the field. The process is, again, every single of our employees actually carries an app on which whatever interaction with the customer, we are able to record it, which we can do for there's a huge team of analysts, analytic team, which is sitting in the head office trying to decode in terms of what we hear from the customer, not just for collections, in terms of customer service, your regular interactions, etc. Lot of things in this slide, right? But this is basically what's our entire business tick in terms of technology, which I talked about. These are just various stages of what a customer goes through. If you're a customer, you obviously get there's an engagement. Underwriting is actually the process of giving out the loan, sanctioning process. There's documentation. Then actually there is a disbursement which goes out, and then obviously the loan has a certain tenure, and there are servicing requirement customer has. Every single aspect of the business, whether it is in terms of how to reach out to the customer, how does the customer come back to us. We have a variety of digital capabilities which we use, be it kind of using a scorecard. So if you have never borrowed in your life, how do I know whether we should be lending any more amount of money and what amount of money? So we have like something called scorecards, where we basically look at lakhs of customers similar to you who have taken loans from us in the past. What is their behavior? What is the kind of which kind of industry they come from? All those kind of things are fed into the rule engine, and really it is a data which the past data which helps us is. Again, just to recap, this is basically 17 years of overall data and almost 9 years of consumer lending experience, which has helped us put this whole piece together. Rest of it is digitally enabled. We have partners, we have our own in-house capabilities, which is basically builds in all the kind of tools and this thing. Today, obviously, you don't sign any agreement. All of us have done something or other. We don't sign a physical agreement, it's an e-agreement. So all those are like enabled on our customer journey. So we talked about giving out loans. Obviously, as a lending company, we have to have a way of raising liabilities, right, which we give out. We are not a deposit taking NBFC. We don't take direct deposits, retail deposits from customers. Whatever liabilities we raise is what is known as wholesale debt, right? So within that, so these are our cost of funds, right, based on which, and there is an important metric which helps determine whether what is the borrowing rate at which wholesale debt will be there, which is basically CRISIL AAA and CARE AAA, which is the highest level of rating. We have maintained it since inception, both due to the kind of risk management framework, discipline with which you do business, as well as, obviously, needless to say, our parentage. We come from the HDFC group, which is known for its governance, compliance, disciplined approach to lending, as well as like growing at scale. Within that, there are many ways you can borrow. You can borrow from banks. You can borrow in the wholesale debt market. You have short-term thing called commercial paper. What we try to make sure is that even here the risk is lowest for the company as well as the investors. We don't rely too much on what is known as short-term commercial paper. The most of them are, basically term loans, which are slightly matched with what is the loan we give. So if we give a loan for 3.5 years, we make sure that whatever you borrow is for 3.5 years, so that we don't have somebody asking us for money or lender asking us for money before the customer can repay. Lends a lot of financial stability. We have seen financial instability coming out in the market over a period of time from various players in the past. I think we have been like completely shielded from all this, primarily because of our very, I would say, cautious and conservative approach to how we approach raising liabilities. So responsible lending as well as responsible borrowing. Just some metrics in terms of numbers. 20% growth over the last 3 years. Similar kind of thing. Profit after tax going up from about, again, sharp jump. This was just post COVID. COVID was slightly depleted, and then we have like come back on track over the last couple of years. This is we are raising money for through an IPO. The last time we raised money was actually in 2017, after which it was primarily wholesale debt. So for 8 years, almost everything, whatever this growth has happened, which is in the lending side, has purely come in from internal accruals and liabilities. So this is like the first time we'll be raising equity capital after 8 years, after 2017. This is us, all of us here. So just as a matter of this thing, Ramesh is probably the only professional company's kind of founding promoter. So he was employee number 1 in 2007. He continues as MD and CEO even today. So only a professional setup, but he's there almost like a founder CEO. Almost every other member of the management team here is been there from that era. Yeah, so very seasoned team, very stable team. We have had a couple of changes, primarily on account of retirement of people, not because of any other reason. Any management team has to be backed by a very sound, independent, qualified board, and we have like a set of independent directors, right? So there is one gentleman who is from HDFC Bank. He represents the promoter group, and rest of them are independent director. Mr. Basu has actually got 30 plus years of experience with SBI group of companies before he became the chairman of HDFC. Last but not the least important, we are backed by HDFC Bank. HDFC Bank symbolizes basically trust, stability, governance, compliance, strong trust not just among customers, also amongst the entire stakeholder community, such as credit rating agencies or other lenders, etc. So we bring in all those, and obviously backed by a solid governance in terms of how the company is run on a day-to-day basis. So where do we go from here after 17 years? We still have India is doing very well, touch wood. Will continue to do well. There will be a growing class of this, what we call as aspirational India. Aspirational India requires lots of other things, amongst them credit, consumer credit. So I think we will continue to expand our customer segment. As a company, we have added a product every 1.5 to 2 years. So all the products which you saw earlier, they were not introduced on day one. We take a product, make sure that it is relevant to our customer, grow it to a certain stage, and then kind of stabilize it and move it to pan-national. Similarly, we have done that journey over multiple products, about a dozen products over the last this thing. We will continue to do that. Obviously, there is a significant investment in technology, data analytics, etc., which is required as part of this thing. I think we have made the right amount of investments in the past, and will continue to do so, irrespective of economic cycle. When there was COVID also, we didn't really slow down our investment in technology in terms of infrastructure. We continue to do, because we believe that really to build something long term, the investment should not stop. Right? If you have a start-stop approach, obviously it is going to result in not such a stable growth. On the other side, primarily basically as a borrowing profile, as I mentioned, it is like completely diversified, not again dependent on just one set of segment for raising liabilities, but across every kind of player, and a completely matched between the assets and the liabilities. Make sure that there is no mismatch in that. In fact, we have a positive match most of the time, which means we have to pay back afterward after the customer returns the money to us. And obviously, with a brand name like HDFC, we are able to attract the best talent, retain them, as you have seen in the management team. It's like a most stable management team. All this backed by, ultimately our business is about managing risks very well. If we manage risks well, we will continue to do well. So it's a very, very robust risk management framework. Obviously, we have learned a lot from our parent in putting together this, and continue to learn from them. So that, in short, is what is about HDB. Is there anything you want to add, Vishal, this stage, or we'll just throw open the floor for any questions and take it on from there.
Especially even what's going on in the geopolitical front, and also the investor appetite for such large issues in the past. So how do you see the timing of this IPO?
So So you just want to introduce yourself and the organization you represent?
This is Narayan from the Financial Express.
So we are here in this for the long term. I think in terms of market movements, external factors, turbulences, these are all part of the game. I said we are doing this IPO after 17 years of existence, right? Have built a company to a certain scale. And I think we also see, we would also expect investors to see us more in terms of a longer time frame, not just in this thing. I think short-term things is like completely outside the control of any individual entity or this thing. So we are here for the long term, and that's how we see this.
And also on the valuation side, a lot of commentary says that it's been quite conservative, given what the stock is trading in the grey market premium. So how do you arrive at it? What are the factors that played out?
Sure. And also to supplement on the first question that was asked, see, Indian markets are deep, and we have seen one of like largest block deals go through in the last 2-3 months. So transactions are happening, and that has been the case across the cycles. So we don't really see any challenge in terms of the issue. With respect to your question on the valuation, we have done extensive roadshows. We have done a lot of benchmarking, market testing, and basis which we have arrived at this price band. Endeavor has been to kind of make it attractively priced for the stakeholders. This is a large issue. This is like a 12,500 crore issue, one of the largest IPOs to happen this year. Even if you take the last 2 years, this is like the second largest. So we have taken all of those factors into consideration, and that's how the price band has been finalized.
Taking a cue from this question, see, your unlisted shares have been, at the reports, your unlisted shares have been trading at 1,500 or so, and you are given a deep discount of almost 50% when it comes to your price band. That is one thing. Why did you decide that? And the second question is, this is the first largest in terms of IPO in this country, and 12,500 crore. Do you think that this is the right time for entering into the capital market in terms, because in the last 1 year, I don't think several number of financial institutions have entered into the IPO. Last year it was different. The year before it was different, but post-COVID, I think this is the first year that we are seeing very few number. Correct me if I'm wrong. Very few number of financial institutions entering into the stock exchange, and they are raising money, and all those things are happening. So how do you see this scenario, ma'am?
Sure.
The questions are open for both.
Yeah, so maybe I can take the unlisted valuation question. So, as far as the unlisted valuation is concerned, frankly, as BRLMs, we will not be able to comment because we have not had any company management that's a price that is determined purely basis the demand and supply, and it is more of a market expectation game. Where it's an independent transaction, individual transaction, which is there between a buyer and a seller. As far as the IPO is concerned, we have done our entire work and basis which the price has been determined. So would not really, because this is the valuation that we have done would be more fundamental based. Unlisted market, we don't know the basis of it. So, that would, and with respect to the IPOs in the financial services space, frankly, there have been, like Bajaj Housing also raised almost around 8,500. So, there have been bigger issuances, there have been bigger QIPs that have happened in the financial services space, and mutual funds, domestic mutual funds are still kind of wanting to up their stake in the FS. Specifically, if that's the question that you were asking.
Okay, I'll just add a couple of points to what Krishna mentioned. Firstly, in terms of grey market, it is completely out of control as far as the management and the company's board is concerned. So you have absolutely no influence on that. So it is very difficult to comment on that. The second part of your question in terms of the various aspects around timing, quantum of issue, etc. I'll probably just add a couple of things to it. We were classified as an upper layer NBFC by the Reserve Bank of India way back in September 2022. And basis that regulation, all such upper layer NBFC were required to get their equity listed within 3 years. So that 3 years is until September 2025. So we have a regulatory timeline to meet in terms of as far as the timelines are concerned. In terms of the quantum, etc., I think it's a mix of both. You have a promoter who obviously, given the regulatory timeline, needs to pare down the particular scale. And plus, over the last 18 years of our journey, we've achieved a particular size and scale. And naturally, as we move along, there will be an element of growth capital that will be required. So it's a mix of both. So that's how we would like you to view in terms of the quantum as well as the time.
Presently, the promoter share is 94%. After IPO, it will be same or
No, so today it stands at 94%. HDFC Bank holds a little above 94%. Once the IPO goes through, it will fall to slightly below 75%. So the good thing in that is any listed company, once it gets post the IPO, the promoter, in terms of the minimum public shareholding, the promoter needs to come down to 75%. I mean, you need at least 25% public float. That's the regulation. So by doing this at one go, we will achieve that minimum public shareholding on day one of listing itself. So HDFC Bank goes a little below 75%.
education loan comes under personal loan category, sir.
Education loan is a type of so all these are under consumption loan, which are used for lifestyle, etc. That comes under consumption loan.
Regarding again to the Israel-Iran conflict and its impact on the IPO, in case EPI is scaled back, is there a provision for increasing the date of subscription?
See, as far as, you mentioned one particular global event, but there could be n number of such events which are in terms of macros and global events which are completely beyond control. So beyond the point, there's no way we can get influenced by it. So we are sticking to the timelines that we have, and having launched the issue, and you would have seen the dates projected earlier, as in Wednesday, June 25 is when it opens, and it will stay open until Friday, June 27. So all of those dates hold.
If you can also explain how this investor portion is being determined. I understand that 60% upper limit is for the QAB portion, And I ask this because in the past, some of the IPOs needed the QIB portion to be oversubscribed to sail through. So is it due to the lack of retail investor appetite? What determines this portion?
So I really cannot.
Yeah, sure. So the issue structure is, as has been done in the previous issuances as well. 60% is would, so out of the QIB bucket, 60% would be for anchor investors, and out of which there are reservations for mutual funds, which is as per the SEBI ICDR guidelines. There's no specific carve out that we have done or any tweak in the issue structure per se. The only reservations that are allowed as per the regulation are with respect to the employee reservation and the shareholder reservation categories, which we have availed, and those details are there in the DRHP.
And what percentage is earmarked for the customers, bank customers?
Bank customers, there is no reservation. Reservations are only for two categories. No.
So it's broadly, as Krishna mentioned, it's exactly in line with what the regulation requires. So 50% QIB, right? And then you have a 35% retail, and then you have 15% HNI. Absolutely nothing different from there. Customers, obviously, you cannot, as she clarified, you cannot have. You can have for the shareholders, in which we do 10% for the promoter shareholder, which we have, but nothing else. And of course, there's a very small reservation for the company's employees, which is 20 crores. That's about it.
See, can I have one more question?
Yeah, sure.
No, that's fine. See, the thing is, this particular exchange you are doing because of the regulatory framework, which has been mandated, right? This is one thing. The second thing is, now, once you have come to the public market and you have been a HDFC backed, so will there be a, will HDFC continue to handhold you in the sense of your investments and all those things, or what will be the role of HDFC post, IPO?
Thank you very much for that question. So let me clarify, right from day one, the company has been built in a way that so that it operates from a business operations, technology, employees, everything that you can think of, completely independent of HDFC Bank. So the 1771 branches that you saw, they are HDB branches. They are not co-located with the bank. All employees are HDB employees. Every single of the 19 million customers that have been sourced are HDB customers. So in short, HDB operates absolutely independent of HDFC Bank. And apart from one nominee director, Mr. Jimmy Tata, who's on the company's board, the bank has no influence whatsoever. Of course, being part of a pedigreed group, the bank will every now and then keep guiding you, because you would be part of the groups, as an example, risk management framework, you will be part of the group's compliance framework. So to that extent, you will gain from the parents' guidance. But beyond that, absolutely no influence. And needless to say, that is how it will remain even after going public. We will operate independently, because that's how the business model is.
Except for the logo.
Except for the logo, yeah. And for using the logo, we pay logo fees. It's a related party transaction, and we pay logo fees, and it's approved by both boards.
And what portion of proceeds of the issue will go towards logo expansion versus the purpose?
So as I said, as Krishna mentioned at the beginning, out of the 12,500 crores, 10,000 is offer for sale, which the promoter is selling down. And the primary is 2,500 crores. And that primary 2,500 crores is going to be used for growth capital, essentially for onward disbursements and to shore up the equity capital. So it's purely for business purposes.
Any more questions?
Just more clarity. Post IPO, the management will remain the same, right? Because as per the regulation, you should have a independent director, non-independent director, and all those will be part of the board. So the management team will remain same, or you will have because everything I mean, even I understand that even for NDHCO's approval, you have to go to RBI. That we can probably.
So the good thing in our case is, although our equity will get listed now, our debt, we borrow from the wholesale debt market, and our debt has always been listed. Now, because of which we are used to all of these listing parameters, whether they are quarterly disclosures, whether they are an X number of independent directors on the board, and the fact that you are part of a pedigreed group, you would naturally look up to the same standards of corporate governance. Now, because of which you would have noticed in that particular slide, 7 of the 9 directors that we have are independent. So there is absolutely no reason to believe, because we are already there in terms of whatever is required. In fact, you are probably better off in a lot of ways as compared to a lot of other listed entities. Coming to your question around the management, you would have again noticed that one of the most stable management team that we've had. It's starting right from Mr. G. Ramesh and the entire senior management team being very, very stable, and every reason to believe that that's how it's going to be going forward as well.
Status quo.
Yeah, so absolutely no changes, whether it's business model or anything else.
So further, you are going to add any other services after the IPO?
Well, to an extent, this is a forward-looking question, so I will be constrained from answering. But the model that we've developed over the last 18 years has worked very well for us. And as we speak, that retail, what Karthik mentioned in the slides, the retail granular model catering to aspirational India, that's our sweet spot. And that's what we believe we would want to be.
So if I may just add, if you look at the last 17 years, those products, as I said, basically depending upon where the need of the customer is, where we see a large market, where we see an appetite, we are added. And historically, if you see every 1.5 to 2 years, we have had a product. A product being a two-wheeler loan is a product, a loan against property is a different product. So we have done that. If you look at historically, we have added a product every 1.5 to 2 years. We can only see acceleration in this, not deceleration in these kind of things.
How you differentiate with the HDFC Bank consumer loan and HDFC Bank consumer loan?
So differentiation, sir, is primarily on account of, typically, I would probably broaden it to not just for consumer durable loan. If you look at a general target customer, a target customer typically for a bank will be a slightly different profile of customer, and for us it will be primarily aspirational India, which would be, so we will have a certain portion of new to credit customers in our portfolio who are first time borrowers. We target mass customers, which is like spread all over India. We have those branches which is like tier 4 branch and beyond is like much higher, and that's how we have grown it in the last year. This is not something which will be new, I mean, relating to the IPO. This is something which has been happening for the last, I mean, since inception. So there's like a very, very clear segmentation which we work towards, and I think that segment continues to grow, and we are very confident of addressing the customer's need and requirement in that segment.
As we close, I want to just highlight that this IPO, this is not just an ordinary fundraise, it's a defining moment in the journey of a company that is rooted in legacy, as we saw, built on trust and driven by purpose. The purpose being committed to further India's or Bharat's financial inclusion and credit access story. We sincerely appreciate your support in taking and sharing this story far and wide. Thank you once again, and we invite you to join us for lunch. Thank you.